Hello, this is Robert Hitt, and this is May 14th, 2009. I want to give you a little update on what I consider to be a very dangerous situation brewing. I posted during the week that we have basically a crash alert on in the equity market. There's a lot of other things involved here, not just the equity market. We've got situations in gold, US dollar, in bonds, and we want to look at all of these things because this could be the mother of all crises we've got right ahead of us here. Dow Jones Industrials right here, and what we're looking at is an Elliott wave pattern on the Dow Industrials. Got 1 down, 2 up, 3 down, 4 up, 5 down. That's a completed wave pattern on the Dow Jones. We're in a recovery right now. It would seem to me that this is going to be bouncing around and retesting this low, or at least coming back into the level it was at in November of 2008. 1 down, 2 up. 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. That means we're in a fourth wave. This is probably wave A of 4 right here, which means B of 4 we should come back down into this area here and retest the November lows. What we're looking at here is the TLT bond index, and next to it is the price of oil. What we can see is you had an explosive blow off top and a crash. This is the same thing that happened to bonds, explosive blow off top and crash. I expect bonds to eventually trade down in this area down here. Next we're going to look at gold. Okay, this is the GLD, the gold index. What we're looking at here is a pattern very similar in here to what we saw in both the bonds and in oil. And if this is telling us something, what we've got in the very near term here is the potential for a spike all the way up to 1,500 on gold. And if it behaves similar to bonds and oil, that would result in a crash back to 500. Now, we do have Astro at the end of this year that could be so utterly deflationary that we could see that 500. In the meantime, we could actually see a spike up that high. The reason for it would be a crisis in the U.S. markets, which is related to the crash pattern, which we're going to discuss next. All right, now the reason why I think that we may be in a crash is because you can see this is the QQQ NASDAQ, which I think is the purest Elliott wave count of all of these indices. You've got 1 down, 2 up, 1 of 3, 2 of 3, 3 of 3, 4 of 3. That's an ABC fourth. That means we get a fifth, which would put the NASDAQ QQQ somewhere below 25. That would be a hell of a move, and it looks like it could come very quickly. What we're going to look for is we're going to look for where the source of this trouble began. I believe that it began on the new moon on April 24th. That was when the swine flu breakout began, and over that weekend there was quite a lot of hysteria about it, and then on Monday morning after that is when the flyby of Air Force One over New York City occurred. The beginning of this problem starts on a new moon. We want to go forward in time and look at where the high occurs. The high occurs on May 8th, and what we have is a full moon on May 8th. That's the start of a crash pattern. We need to look out about 8 to 10 days from the high and see where an initial low might fall. For me, it looks like it's going to be around May 18th, which is a Monday. I believe that's a Monday. And what you've got present here is Mercury, once again, squaring Jupiter and Neptune. This square was prevalent on the new moon, and we've got that square returning. Now let me explain to something about this square. This square generally causes an error in judgment. And in this particular instance, I believe that Mercury, which represents news, in square to Jupiter and Neptune is going to cause high inflation awareness. It's going to cause very poor risk assessment, and I believe that people will think that there's some sort of short-term low in place and will be prone to try and buy that low, and that's where the danger comes in. In any case, we're going to move forward from May 19th, and we're going to look out at the 28th trading day after the high, which historically is where a crash wave would begin. And that particular day is going to be on June 16th. We're going to look around June 16th and see what might be occurring that could precipitate the crash wave. And what we've got is, oh, look at this. We've got Sun opposed Pluto. We've got Moon conjunct Venus and Mars. And they're forming a stress aspect to the Sun-Pluto opposition. That's a 45-degree angle. That's a 135-degree angle. We also have a Sun square to Uranus occurring. That is another aspect that causes sort of chaos. So you can definitely look at this time period around June 18th, 19th as time points where you could have a termination of a stop running rally or a retracement rally. Then we need to go and look at where the 35th trading day is, because that's where we would actually be looking for an acceleration crash mode to occur. That's going to come in at June 25th. There's a lot of stress. There's Mercury squared to Saturn. There's a Moon squared to Venus and Mars. Sun is opposed to Pluto. And this could be a press the bulls to the limit here. Also, Jupiter and Neptune are just past being exactly conjunct, so you're going to have very high inflation awareness. Now, what this could do is cause a US dollar panic, and that would explain why the stock market's crashing. And when we go back to look at what I was talking about with the bond market, it could explain the movement down in the bond market and also the movement up in gold. So what it seems to me is we've got a situation here where things are synchronized, and it's very possible that you could see gold at 1,500, bond prices dropping like a stone, stock market dropping like a stone, and the US dollar dropping like a stone, all in a very short time frame. So what we're looking at here in wrapping this up is the potential that the May 8th high is the high before a crash, and that the crash culmination wave will be sometime around June 25th.